Hey everyone, this is Mike Minter with Financial Synergies. This is your Market in Minutes report. We are looking back, of course, on last week, January 22 through 26 of 2024. So let's take a look at what occurred. It was another solid week, really, in the markets. We've seen a nice little run here. We're in the midst of a pretty good rally in the broader context of a really nice bull market. Frankly, sometimes I think that gets lost just with all the wackiness over the last couple of years. But it's been a very, very strong market. So things are really, really looking good right now. So the Dow is up, S&P, of course, Russell up very nicely. This is a nice turnaround because as we've seen, small caps have kind of taken a back seat here lately, but nice to see them having a little run here. NASDAQ up almost 1%, and foreign developed stocks, the EFA, MSCI EFA, up 2%. So across the board, just a great week. So let's look at year to date. So this has been a nice boost to all of the indices, even despite the fact that small cap is still down for the year. This was a nice change of pace to kind of bring it out of its close to 4 or 5% down on the year. So that's a nice turnaround there. And even foreign stocks trying to climb out of the dumps here and get back to positive. So still way off from that. But as you can see, just the broader market in general, S&P 500 is doing fantastic. A lot of that is largely driven by tech right now. The so-called Magnificent Seven, or whatever you want to call it, is doing really, really well. We'll talk more about that. Rates. So really not a whole lot going on here last week. They kind of were pretty static, which is not a bad thing. But 30-year Treasury still sitting around 4.3, 10-year around 4, 2-year 4.3, and then we have our 30-year mortgage national kind of average at around 7.19. That didn't change much at all last week, but still definitely off the highs of over 8% at one point for a 30-year mortgage. So nice to see that kind of coming down. So stocks power ahead, a lot going on here. So big tech was back, pushing the Dow and the S&P to new highs early in the week as markets resumed the late Q4 rally. And of course, the Magnificent Seven, so-called, comprising 28% of the S&P 500. That's a big slug. So more than a quarter of the S&P is now Magnificent Seven heavy, so to speak. So you might argue that's not a good thing, and I would say we want more breadth than that. But they have been the big driver, for better or worse, of the market for the last couple of years. So they resumed their pole position at the head of the pack as investors maintain their AI, artificial intelligence related bullishness, and rewarded widespread cost cutting at many tech giants. So we'll talk more about that. That basically means layoffs. So we'll get into that. While the rally fizzled on Friday, the week's gains were slow and steady. The big economic news last week was way better than expected economic growth and inflation news. So real GDP, gross domestic product, grew at 3.3 annualized in Q4 of last year, ahead of Wall Street consensus expectations of 2. That was a pretty vast outperformance relative to what they were expecting. So this economy continues to show resiliency. It's just full steam ahead, and we've managed to do that without, even while, rising rates and the Fed attempting to kind of balance all this and achieve this soft landing that some are arguing we're already in the soft landing. I think you never really know that, and it's kind of one of those hindsight things. But so far, everything is pointing in the right direction. Now, that being said, we all know that can turn on a dime, and so I would be hesitant to say we're out of the woods yet. So, Personal Consumption Expenditures (PCE) index, one of the Fed's favorite inflation gauges, showed core inflation. So this is excluding food and energy, cooled in December. So again, very good news. So there was an annualized rate of 2.9, beating consensus expectations. So core inflation was 3.2% on an annualized basis, the lowest level since March of 21. So good news there. And while inflation update didn't move markets much, it helped validate investors' optimism that Fed policy has maintained economic growth while bringing inflation down. That is the soft landing we've been talking about. So let's take a look at kind of more economic-centric events here. So earnings season feeds FOMO, fear of missing out. So the market digested Q4 earnings news from some of the largest companies with enthusiasm, feeling like FOMO, fear of missing out, of course. So this investor sentiment, and it seemed to build the market momentum for the week. So while the enthusiasm for AI continues to be one of the drivers of technology stock prices, the spotlight last week was what we just talked about on the last slide was cost cutting or layoffs. So over 23,000 workers at 85 tech companies have lost their jobs this month. Not great news for those employees, but the market likes it because it is a cost-cutting measure that the market sees as driving profitability in the future. And so for better or worse, this is seen as a positive, although these I don't relish these people losing their jobs, of course. This is the way the market views it. So market appears to be rewarding the cost-cutting measures, with many tech giants repositioning themselves with AI, artificial intelligence, in mind, and some analysts inferring that this emphasis on efficiency may encourage investors and investment. So AI, going back to that, really looking to the future, I think a lot of these tech firms are finding ways to use AI in lieu of employees or hiring additional people, which is maybe not the best thing in the short term for the people losing their jobs. But this technology, like it or not, is going to push us towards, I think, more AI-driven processes and technology, and this automation that unfortunately for a lot of people may mean that it leads to a layoff. But over time, they're seeing this as a way to really become more efficient and increase profitability. What's on deck for this week? So we have key economic data. Tuesday, FOMC meeting. That is the Fed. That's a big one. So tomorrow I'll be watching that. This is a big week. So consumer confidence and the home price index all reporting tomorrow. Wednesday, FOMC announcement. So this is when Fed chair, Powell will come out and say some words most likely, and we'll kind of get a summary of what they have talked about. This is a big week for that. Thursday, jobless claims, ISM manufacturing, and the Fed balance sheet. Friday, employment situation, always a good one. That'll be a driver as well. Companies reporting earnings. So Tuesday, this is a big week. I won't go through all these, but there's some tech in here too, but just a lot of overall, a diverse group of earnings here. But Microsoft, Alphabet, that's huge. That's tomorrow. UPS, Starbucks, and on Wednesday we have MasterCard, Boeing, Automatic Data Processing, ADP. Thursday, Apple, Amazon, Meta, Merck & Company, and Friday, ExxonMobil, Bristol Myers Squibb. This is a huge week for earnings. There will be a lot of news about that, and definitely see some market drivers here. So that's it for this week, folks. I appreciate you tuning in. Of course, we will get back to you next week on what occurred throughout this week, and we will do our best to report accurate and helpful information to you. If you would like to contact us for any reason, please, we would love to talk to you, whether you're a client, prospect, or just want to get some advice on your finances. Give us a ring or contact us in any of these ways. Also, go ahead and subscribe. Hit that subscribe button down below if you like this type of content. We'd love to hear from you or have you as a subscriber to our channel. But that's it, folks. I appreciate your time, and we will talk to you soon.